SME R&D Tax Relief is a generous incentive that helps innovative, small, and medium-sized businesses by giving them tax reductions and cash credits worth thousands of pounds. In this video, we will cover the most important things you need to know about how the scheme works, such as how it generates cash flow and how it helps companies in different financial situations. Over the past 20 years, SME R&D Tax Relief has become an important source for small and medium-sized businesses in the UK to generate cash flow for new innovation. By letting companies claim back up to 33% of their R&D spending as a cash credit or corporation tax cut. The scheme helps smaller businesses invest in cutting-edge development work and encourages startups and scale-ups to create new products and services. SME R&D Tax Relief is a highly accessible and generous source of capital because of how much relief it gives. But it's not the easiest system to understand. There are some things you need to know about how the scheme works before you file your claim. In particular, it's important to understand how the scheme's financial incentive is made through two different approaches. They are R&D Enhancement and surrendering your loss. In this video, we'll take a closer look at both approaches and explain how they affect your claim for R&D tax credits. We'll also explain how the PAYE Cap, which is now in effect, will affect your claim. Fundamentally, the SME R&D Tax Relief works by inflating the qualifying expense of your business. As a result, your business's expenses go up. Of course, it's all on paper. R&D Enhancement, or the enhancement approach, is the term used to describe this process of increasing the value of your expenditure. This is one of the SME R&D Tax Relief scheme's most important parts. The enhancement rate, which is 130% right now, tells you how much you can add to your eligible expenses. This means that if you spent £100,000 on things that qualified, your enhancement would be worth an extra £130,000. Then, you add the two figures together to get your new cost, which in this case is £230,000. When it's time to file, you put your company's new expenses on the CT 600 form. This might seem like an odd thing for the government and HMRC to let companies do, but this is how the SME scheme works. Your financial situation determines how the enhancement impacts your business and your claim. Let's look at some examples. As mentioned, R&D enhancement inflates the qualifying expense of your business. If your business is making profit, its profits will go down if its costs go up. If your company makes less money, it will have to pay less corporation tax. This is how tax relief is made possible by the SME scheme. Let's look at an example of how the enhancement approach changes a company's balance sheet if they are making a profit. Here, we can see how the enhancement approach makes a tax relief worth £24,700. That's the same as getting 24.7 pence for every £1 spent on eligible expenses. This is the maximum relief that a profitable business can claim from the SME scheme. Let's now examine how R&D enhancement impacts loss-making businesses. Your business doesn't have to pay any corporation tax if it is making a loss. So, what do you get out of the SME scheme? Well, if your business isn't making money, the enhancement approach will make its loss even bigger. You can see that the enhancement approach has added £650,000 to the company's loss. But how does the company benefit from a bigger loss? We can answer this question by revealing the second approach that SME R&D Tax Relief relies upon to create its financial incentives, surrendering your loss. This is another important part of seeing how SME R&D tax relief works. You are permitted to swap or surrender losses connected to your enhanced qualifying expenditure under the SME R&D Tax Relief Scheme at a rate of 14.5 pence per £1. In other words, HMRC will give you a cash credit worth 14.5 pence for every £1 of enhanced spending that you surrender. This is how a payable cash credit is made by the SME scheme. Using the same example, the loss-making company could surrender its enhanced expenditure of £1,150,000 in exchange for a cash credit of £166,750. That works out to 33.35 pence for every £1 spent on qualifying expenditure. The most relief that can be given through the SME scheme is 33.35%. You don't have to surrender your loss. You can also carry your losses and use them in future years to lower your corporation tax bill. In fact, doing this gives your business a bigger financial windfall. When you surrender a loss, you get a cash credit of 14.5 pence per £1 of enhanced expenditure. But using a loss to reduce future tax bills saves 19 pence per £1 of expenditure. Does this mean that you should always carry forward with your losses? No, not always. Your company can only use a loss to reduce its corporation tax if it makes taxable profits. So, if you don't think you'll make money soon, you might be better off just surrendering your loss. Also, you should think about how much cash you possess. If you need cash right away to pay off debts, invest in growth, or increase your cash runway before a new funding round, it may be better to surrender your loss for a cash credit. If your business is breaking even, the loss surrendering and enhancement approaches have different effects on your claim. You are exempt from paying corporation tax because you are at break even. So there is no tax for you to relieve. Also, since your income and expenses have cancelled each other out, you won't have any R&D related losses you can surrender as a cash credit. The good news is that the enhancement approach will put you in a loss. But you can only surrender the enhanced amount, which is equal to 130% of your eligible expenses. In other words, you will give up your 130% increase in exchange for a 14.5% payable cash credit. This means that your cash credit is now worth 18.85% of the money you spent on eligible expenses. Nobody knows why companies breaking even receive the least amount of relief. If your business wants a cash credit instead of tax relief, there is another factor that could affect how much money your business gets. It's called the PAYE Cap. The amount of payable cash credit you can access through the SME scheme is restricted by the PAYE Cap. The limit is 300% of the total amount you owe in pay and NIC plus £20,000. So, if you owe £20,000 in pay and NIC, the most cash credit you could get would be £80,000. The PAYE Cap only applies to businesses that want to get a payable credit. It has no effect on companies that claim tax relief. Also, some companies are exempt from the PAYE Cap, even though they are claiming for a cash credit. Hopefully, this video has given you a better understanding of how the SME R&D Tax Relief Scheme works and how much relief your company could receive from the scheme. From rising energy prices to soaring inflation, UK SMEs are grappling with a number of significant business challenges going into the next financial year. You can't control many of these factors. What you can control is how well you improve your cash flow, prepare for the unexpected, and make the right choice for your business's near-term future. This may be one of the most volatile periods in recent history, but we can help you meet your growth plans through tax incentives aimed specifically for your business. It's easy to speak with us. Click the link in the description to arrange a callback from a tax specialist in our team. We'd love to talk to you, so please reach out for complete peace of mind.